Good afternoon and a very warm welcome, everybody, and thank you for joining us today for this webinar to launch our report in collaboration with PwC, a global centre for nature finance. I'm Keith Bottomley, the Deputy Policy Chairman and Deputy Political Leader here at the City of London Corporation. Now, at the outset, I'd like to say a big thank you to the PwC team for the huge amount of work that they have put into this report, and also to thank the Green Finance Institute for their wonderful support, contributing case studies and providing valuable insight. Now, it's well understood that the climate crisis is the single greatest challenge facing humanity today. We understand the imminent economic threat posed by nature loss. And we also know that we simply cannot do business at the scale seen today in a nature-depleted world. What is perhaps less well understood is how, in changing our relationship with the natural world, there will be huge economic opportunities. For us in the United Kingdom, we can harness our leading sustainable finance ecosystem and position ourselves as a global centre for nature finance. That's very much the aim, the objective, and the opportunity. Part of that change is for the financial world to think of nature as an asset or as natural capital. This change will require a lot of effort, but will also bring about significant opportunities, as I mentioned a moment ago. Attaching a value to nature creates value in investing in it, and value in reforming supply chains to be more nature positive, especially when, for example, these reduce flood risk or absorb carbon. Now, we know that change in this area can happen from the global commitment to net zero. A whole industry of green technology has blossomed, and we now need to do the same for nature. It's as simple as that. Invest in research and development, finance new solutions, provide tools, insights, and support. So by 2030, annual investment in nature-based solutions needs to more than triple to $484 billion. The UK should aim to play a central role in making that happen. We should harness our expertise as a leading sustainable finance centre to develop a world-leading nature finance ecosystem. That way, we support and channel finance flows towards nature-positive outcomes in the UK and indeed globally. Better for the UK economy and better for the planet. To achieve this ambition, collective action will be required across the nature finance ecosystem, including in science and technology, finance itself, government, and regulators. As part of the early moves for change, we at the City Corporation welcome the enthusiasm to upskill on nature and biodiversity and the opportunity to participate in the conversation. Let me leave you with this thought. We are only 4 days away from the launch of the Task Force for Nature-Related Financial Disclosures final framework. This means that nature-related financial disclosures are on the way, so we really must act. Whether you are at the beginning or further along your nature finance journey, I hope that you will take something away from the webinar today, and that, of course, includes our report. Everyone registered for this webinar will receive a copy of the report, a Global Finance Centre for Nature. It gives a comprehensive overview of the UK nature finance ecosystem and indeed presents recommendations for government and industry. I know that you will be looking forward to hearing more about these recommendations from our panel of experts. So allow me to hand over to our panel chair, James King. James is a senior manager in sustainability at PwC, specialising in nature finance. I hope we're going to have a great conversation. James, over to you.
Thank you very much for that fantastic introduction, Keith. I really liked your point about the parallels we can draw from the scale of industry and activity that now surrounds the challenge of reaching net zero and what this might mean for driving a nature positive agenda. Good afternoon, everyone. I'd like to say welcome and a huge thank you to all for joining today's session. As Keith mentioned, my name is James King, and I'm a senior manager at PwC, where I lead our team's work on nature, finance, and policy. And I've had the privilege of working alongside colleagues from the City of London Corporation and Green Finance Institute over the last few months on the report we're launching today, which presents a roadmap for how the UK can become a global centre for nature finance. So our exceptional panellists are going to explore some of the key themes within that report and give their perspectives on the current nature finance landscape within the UK. We're going to have about 30 minutes of discussion with the aim of 10 to 15 minutes of audience Q&A. So please do submit any questions you have, and we'll try to get through as many of them as possible. I'd now like to invite each of our panellists to introduce themselves. And rather than provide a fun fact, I'd like each of you to please share one fact or statistic that really brings home for you the case for action on nature. So Katie, perhaps we could start with you, please.
Of course, thanks, James, and thanks so much for the invitation to speak today. As a brief intro, I'm the head of nature at Lloyds Banking Group. I joined about 4 months ago, so still getting up to speed. And previous to that, I was working for Share Action and for UNAP WCMC beforehand. And one of the statistics that really brings it home for me is about the UK being one of the most nature depleted countries in the world, and actually being 189 out of 240 countries in terms of biodiversity intactness, and that's something that really resonates and something that we need to address.
Thanks, Katie. Yeah, a truly shocking statistic. Emma, would you like to go next?
Great, and great to be here joining with you and the other panelists, and congratulations on the launch of the report, a fantastic contribution to this incredibly important issue. And I'm really pleased that my colleague from the Green Finance Institute, Helen Avery, was able to work and provide comments on an input into the report. So I'm Emma Howard-Boyd. I'm currently chair of the Green Finance Institute and also leading a review for London's Mayor, the London Climate Resilience Review, looking at how prepared London is for the climate crisis. And nature plays a huge role in some of the solutions that we will need, not just to meet net zero, but get ready for the climate shocks that are playing out on an almost daily, if not multiple times a day basis around the world. The heat waves, the floods, the fires. And my fact actually comes from a report that PwC published earlier this year, the 55%, and I think it builds on Katie's point about the state of nature in the UK, that 55% of global GDP is either moderately or highly dependent on nature. And so that shows the extent of the work that we've got to do in this space. So again, leads to why this report is so important today. Thank you.
Thank you, Emma. Always great to hear our team's work quoted back at us. And to complete the group, Mark.
Thank you very much, James, and good afternoon, everybody. An absolute pleasure to be here. Really grateful for the opportunity. So my name is Mark Manning. I'm Strategic Policy Advisor on Sustainable Finance at the Financial Conduct Authority. And I think this is a very timely conversation that we're having here today, because of course not that long ago now, just a couple of months ago, the Financial Services and Markets Act 2023 was passed, and that includes measures for implementation of certain environmental commitments in the UK, commitments that relate to the Global Biodiversity Framework that was launched last year at the Kunming Montreal Summit. And within the Financial Services and Markets Act, there is a new have regard for the FCA, which is that we should not only have regard to the UK's net zero emissions commitments, but also the UK's targets under the Environmental Act. So this is a very timely conversation because we've been building our own capabilities within the Financial Conduct Authority in this area for a while. Hopefully we'll talk a little bit about that later. It's absolutely essential that we all, as a financial services community, get on top of this. I think, so my stat is actually one that was released just yesterday. The science is telling us that we are at risk of breaching planetary boundaries. And yesterday, the Stockholm Resilience Centre issued an assessment of all 9 planetary boundaries, showing that 6 out of those 9 are now being crossed. That's very sobering reading, but it is also a strong call to action. So if I may, I'll add one other stat, and that's from the Global Biodiversity Framework, which called for the mobilization of all sources of finance to implement national biodiversity strategies and action plans worth at least $200 billion a year by 2030. So that is a very significant sum for the financial services sector to mobilize. And as the Securities and Conduct Regulator in the UK, we have a very important role to play in creating the conditions in which that can happen. Thank you very much indeed. Great to be part of this conversation.
Thanks, Mark. Yeah, really timely update. I think the planetary boundaries graphic always reminds us that these interrelated crises we're facing can't be tackled in silo. And brilliant to hear about all the work you're up to, respective institutions. I think as the nature finance industry continues to scale in the UK, I'm always fascinated to learn about the breadth of activity that's taking place. And this really relates to a key motivation behind the development of this report. We recognise that GFI and City of London and PwC, that the UK's existing strength as a global leader in green finance positions it very strongly to develop into a global centre for nature finance. So to tackle this, how that roadmap, our report starts by re-emphasising the case for action on nature, which I'm sure many people on the call are very familiar with at this point. But we also include the economic opportunity for the UK in becoming that global centre. It then articulates why the UK is well placed to lead on nature finance, and also provides an overview of the current ecosystem of diverse actors working in this industry. I think one of my favourite parts of the report is we try to distill this ecosystem into a single page graphic. And my main takeaway from it is just how many actors are needed to enable this industry to function well, from capital providers and project developers to policymakers, regulators, standard setters, and then, of course, data providers, academia, NGOs, professional services, trading infrastructure, just to name a few. And improving communications between all of them is essential. But the bulk of the report is dedicated to presenting this roadmap for how the UK can become a global centre for nature finance under 2 themes. The first is financing nature, and the second is integrating nature into the financial sector. So what do we mean by those? Well, the former, it sets out how financial flows for nature can be incentivised and enabled to unlock the investment required for a nature positive transition. So it's really about catalysing finance for nature. While the latter is about how UK regulation supports alignment of the financial system with key goals on nature, and also a few recommendations on how regulation could perhaps be enhanced to ensure greater alignment going forward. But taking a step back, I think it's crucial to understand, why do we actually need a global centre for nature finance in the first place? So to that end, Emma, a term we cover in the report is the financing gap for nature. What does this term actually refer to, and how big is the current financing gap?
Thank you. Well, that's a great and important question to be asking. And it really sets out the gap between the cost of achieving all of the UK's policy ambitions around nature and the money that exists within the public sector to deliver on that. And no surprise that given there is a huge level of ambition that exists here, the report and the analysis that the Green Finance Institute commissioned in 2021 shows a massive gap somewhere between, because this is quite difficult to estimate too, somewhere between £44 billion and £97 billion needed over the decade ahead. And that's across the whole of the UK, but England in particular shares the majority of that gap. I think really important to emphasize that this was done in 2021, and the whole process of going through this analysis showed how difficult it is to come up with these figures. So I think we need to give that healthy warning, but equally you've got to start somewhere. So some of the ongoing work that the Green Finance Institute has been doing with funding from the likes of the Esme Fairbairn Foundation and others, including central government and devolved government, is to plug some of those gaps, to really understand what finance is required to deliver on the nature benefits which cross over into net zero benefits and cross over into climate readiness as well. And I think where we've got to get even more detailed and involved is understanding where those different flows of money can come from to attract and involve the private sector. One of the figures that I used a lot when I was chair of the Environment Agency, I came to the end of my term about a year ago, was looking at infrastructure spend for the rest of this decade in the UK as set out by the IPA, the Infrastructure and Projects Authority. £650 billion worth of infrastructure to be built by the end of this decade across all infrastructure sectors, whether that's education, transport, utilities, etc. Of that 650 billion, the bit that you could associate with environmental and nature, although this involved grey, green and blue infrastructure, was the roughly 5 billion allocated to flood. Now that to me shows what a thin green streak of money allocated to a specific environmental intervention, but across all of that 650 billion, and that's roughly 50% public, 50% private expenditure, and this is just for new build, you can be thinking about being nature positive, addressing your net zero and addressing your climate resilience. So again, in working out where financing nature positiveness comes from, we've got to look at all of those different pots and interventions to crowd in that finance. So although the research is a couple of years out of date, I think some of our knowledge of what is required will probably have gone up, but equally some of the sources that may be possible to help plug that financing gap may have broadened as we try and make sure that nature isn't just within the realm of our environmental discussions, but features across all of our work in relation to the economy. Thank you.
That's really helpful context, Emma. Thank you. I suppose some clear evidence of how seriously the financing gap for nature is starting to be taken, and also the opportunity it presents, is illustrated by the fact that, Katie, you've been appointed to the new role of Head of Nature at Lloyds. What does this imply about the direction of travel, and why is now the time for the finance sector to take action?
Yeah, thanks, James. So I think it's clear in my view in particular that financial institutions are really understanding the critical role that they play in tackling climate change, but now also in tackling the loss of nature. I think as a result of that, we're seeing financial institutions create nature-specific roles, and importantly, these are often now being put in senior positions, and that really demonstrates the importance that's being placed on setting the right strategy in this area of nature. In my role as head of nature, it's my responsibility to think about how nature's embedded right across the group within our decision making, from the products and services that we offer to the investments that we make. So far it's been really great to see the commitment coming from the top of the organisation, from senior leaders and from stakeholders across the group who are able to really lead by example. And although I've only been in the role a few months, I can see how seriously the topic is being taken. We've provided training to our most senior leaders who are fully committed to engaging with me, and we're working across the group to do so and refine our nature approach as a business. And it's clear that while we're taking steps, there's a huge amount that's needed in order to support the protection and restoration of nature. And I think this has really been driven by a number of different sort of factors that's going on in this nature finance space at the moment. So just last year with COP15, the biodiversity COP, we saw the agreement of the global biodiversity framework, which is giving the mandate to all countries around the world to sort of set out the targets that we need to reach by 2030. And now we're seeing those translated into the national level within national biodiversity strategies and action plans. And at a UK level, we see this as part of the legally binding targets through the Environment Act and a plan to meet that with the Environmental Improvement Plan. Also, there is the central banking and financial supervisor piece, which just last week published this new report setting out how to define nature-related risks, a really, really important framework. And they've been doing work for some time showing how biodiversity loss leads to financial instability, and that is really driving action within the finance space. And then one of the other things that we've of course heard mentioned already is the TNFD launch next week, and this alongside other reporting standards like the CSRD at the EU level are really driving financial institutions to take action. Thank you.
Thank you, Katie. That's all really encouraging to hear. Mark, I'd like to come to you now to understand a bit more about the drivers for firms taking action on nature. So what do we mean by terms such as nature-related impacts and dependencies, and why will initiatives such as ISSB and, as Katie just mentioned, TNFD be a catalyst for action?
Thank you very much, James, and great interventions so far. There's lots of richness here already. Just a few thoughts in response to what you've just said there. So first of all, I think we need to start from the recognition that every company operates as part of an interdependent system. Every company is dependent on a mix of human, natural, social, and of course financial capital resources. And every company maintains relationships with a whole variety of stakeholders, with the communities in which it operates, and of course with the natural environment. So all of these resources and relationships create impacts and dependencies arising from a company's activities. And these can be, you can see positive or negative effects on the capacity of nature to provide social and economic functions. And you can see companies have dependencies on natural ecosystems such as water flow, water quality, a habitat for pollinators. All of these impacts and dependencies then in turn give rise to sustainability related financial risks and opportunities that will affect a company's future financial prospects. And this is all firmly recognized in the standards recently published by the International Sustainability Standards Board, the ISSB that you just mentioned, and of course in the forthcoming framework for risk management and disclosure that's been developed by the Task Force on Nature-related Financial Disclosures. The great news is that frameworks such as TNFD are coming through really at a timely point to help companies on their nature journeys. There are tools within the TNFD framework that companies will be able to use to assess, manage, and then disclose effectively on their nature-related risks and opportunities. And what we've seen over the past several years from the way in which companies and financial services firms have engaged with the recommendations of the Task Force on Climate-related Financial Disclosures, we should see a similar approach being taken across both the financial and the real economy to engage with nature-related risks and opportunities. I would say that from our perspective at the FCA, we recently responded to the ISSB's request for information around its forward-looking agenda, and we strongly encourage the ISSB to begin work towards a thematic standard for reporting on nature and biodiversity within the ISSB framework, informed by the final framework to be published next week by the TNFD. Within our response, we emphasise that better investor material information on nature can help financial markets and capital markets respond to the urgent need for action on nature, as we've already been discussing. And ultimately, we need to ensure within the ISSB framework and within all of our work that the interdependencies between climate and nature are recognised, understood, and factored into our decision making. I saw a statistic on this recently saying that more than 20% of the adverse nature climate impacts that we're observing today are actually the outcome of nature depletion. So very, very tightly interlinked considerations here that we need to factor into our own analysis. Thank you.
Thanks, Mark. So on some level, the incentives for action are becoming ever clearer, but the fact there's a persistent financing gap perhaps suggests that more work is still needed with regards to the enabling environment for nature-related investments. I mean, Katie, our report discusses the role of government in de-risking investments in nature. Why is this important, and can you share any examples of where this has been done effectively?
Yeah, so the report, it does a really great job of running through this, and I'll try to sort of summarize things and give a few examples here today, but I'd encourage you all to read it. Under the sort of current policy and regulatory settings that we're in, the risks of investing in nature are often outweighing the potential benefits right now, and that's primarily being driven by low returns and high transaction costs. But what we're seeing is that blended finance mechanisms can offer a really clear tool to de-risk investments and help to catalyse private sector finance. And those blended finance mechanisms can take a number of different forms, including concessional capital, and they help to provide the necessary risk and return profile that's needed to generate that private sector investment. Just to give one example, in 2020, DEFRA supported Moreover's Land Degradation Neutrality Fund through the UK's International Climate Finance Programme. There was an anchor investment of 10 million, and that provided a protective cushion to significantly reduce the risk profile for private investments in the sustainable land use sector. The fund was used to support over 40.5 million of additional investment from the private sector. That inspired confidence for environmentally sustainable operations. There are a number of other de-risking solutions as well, such as the offering of like favourable interest rates or taking first loss positions. And one of the exciting developments we've seen in this space is the UK Nature Fund, which is managed by Federated Hermes and Finance Earth, and that's got seed capital from DEFRA. And what they're doing is leveraging private capital at scale to help deliver investments in nature-based solutions and nature impact enterprises across the UK. So these are just a few examples, but we need much more like this, and it's inspiring to hear about all the work that's going on in this space.
Thank you, Katie. I'd like to move us on to the report's second focus, which is integrating nature into the financial system. So the report emphasises, as has been brought up by the panelists several times now, that we can't treat the climate and nature crises as separate. There can be no net zero without nature. So, Mark, a fairly sizable question for you, I'm afraid, but how is the UK leveraging its leading regulatory architecture for climate and building on this for nature?
Thank you very much. No, really, really important question. And I already alluded to the fact in my opening remarks that we've been ramping up in this in this space within the Financial Conduct Authority. Part of that recognises exactly what we've been talking about here, the close interdependence between climate and nature, and indeed between social factors as well. And as a result, what we've been building in terms of our overarching ESG strategy is a work program to create the right regulatory conditions for sustainable finance, be it directed towards climate, nature, or social social financing activities. So ultimately, we believe that the regulatory framework that we're building is already in a form that can be leveraged for nature finance. Let me just give a little bit of a sense of what I mean by that. So first of all, our ESG strategy is organised under 5 pillars. We call them the 5 T's: transparency, trust, transition, tools, and team. And nature can be fitted very neatly into our work on under each of those pillars. So first of all, transparency. I've already spoken about the critical role of a flow of high quality investor material information from the real economy into the financial system. We have already put in place climate related disclosure rules, but as we adapt our existing climate related disclosure rules to point to the UK endorsed ISSB standards away from TCFD today, we'll also be laying the foundation for future implementation of a thematic reporting standard on nature as this is developed by the ISSB. But we've also got to remember that already within the standards that the ISSB has published, we have general sustainability related disclosure requirements under which companies would already be expected to report on nature related risks and opportunities. A thematic reporting standard will provide more detail and granularity and a structure for them to be able to do that, but there will already be a basis for that in the existing ISSB standards. And then under trust, I think here this is a really important building block of our regulatory framework and a key enabler, I think, of effective finance across sustainability topics, including nature. Within our work under the trust theme, one of the key pieces of work that we've been engaged on for the last little while has been a framework for labelling and classification of sustainable investments and accompanying disclosures at the level of asset managers and investment products. And this regime has been developed in a way that it can accommodate any sustainability objective for a product, whether that's related to climate, nature, or social issues. So again, a framework within which nature can fit very readily. In a similar vein, our work on ESG data and ratings, the focus has been on supporting a trusted ESG data ecosystem, not just a climate one. So again, nature-related data will fit very neatly into the work program that we have already had underway on ESG data and ratings. And then transition, I think this is a really interesting one. In your opening remarks there, James, you talked that there can be no net zero without without nature. I think we've been engaged very actively over the last 18 months with the Transition Plan Task Force. Our work with the task force has been a central plank of our work programme under this transition pillar, and we've recognised in that work the interdependence between transition planning with an ultimate climate objective and the need to pursue transition plans with regard to those interdependencies between nature and society. So ultimately, we've very much been approaching that work in such a way as to encourage those developing their transition plans to think in a strategic way, to think to approach their work in recognition of the fact that they are operating within an interdependent system, and that they will need to take into account their resources and relationships across stakeholders, society, the economy, and the natural environment. I think a good expression of that recognition is the fact that over the course of this year, the Transition Plan Task Force has had a dedicated work stream on nature, and that work stream has fed into the final form of the TPT's Transition Planning Disclosure Framework, which will be published in early October. And there will also be further work to take that work stream's activities so far and develop a dedicated guidance report on nature over the coming months. So that is another really important aspect that I wanted to draw out. If I could just quickly wrap up the final two themes, tools and team. Tools is all about how we work within within our network to use our convening powers and facilitate access to the right tools and the right guidance to help people on their journeys in this area. One vehicle for that is our Climate Financial Risk Forum, and we will consider how we can further replicate how we have engaged with industry through the Climate Financial Risk Forum to deepen our relationships on nature and play that convening and facilitating role there. And then finally, team is how we look inwardly within the FCA to make sure that we've got the right skills and capabilities and we've got the right approach to deliver on our aims and objectives in the area of sustainable finance. And we will leverage the embedding program that we've already established across the FCA so that we build capacity across supervision, authorizations, enforcement to ensure that nature-related considerations are also firmly embedded across the FCA. I hope that's helpful. Thank you.
Wow, there's so much going on already, Mark. Thank you for such a clear overview. I'm sure that was really hard to keep to just a few minutes. Emma, I know that Green Finance Institute is also doing a lot of work on this topic of integrating nature into the financial system, including working with DEFRA and the Bank of England to assess the nature-related dependencies of the UK's financial sector and also to quantify nature-related financial risks to the UK economy. What are you expecting to find out as part of this assessment, and what do you hope is done with that information?
Thank you for that question. But first, if I may, I wanted to just build on a couple of points that Mark made so that I don't lose them with all the richness of this discussion. So firstly, around data and disclosure, this is fantastic to see the progress, but it has to lead to deals and delivery. We have to see nature improve on the back of all the data that is being extracted and thought about. So just really want to emphasize that is where the action comes in. Ultimately, that is where we see our depleted natural environment being restored. Regulators, again, fantastic to see the work of the different financial services regulators, but it is really crucial that we make sure that discussion, those developments take place in the context of other regulation. I will say this because I chaired it, but the environmental regulators, but equally important, the economic regulators. We've got to join up this discussion in a way that means that we don't have competing regulation and we're aligned in where we end up with that, ultimately the deals and delivery that will make a difference for both the climate and the nature emergencies. And then Mark, the point about the climate Financial Risk Forum and also the Transition Plan Task Force, where both nature and adaptation are featuring in these work streams. I think this joining up will make a big difference, both to those operating in the financial sector, but also those companies that will be the ones that are making the decisions out in the real economy that will make a difference. So again, the Green Finance Institute is really pleased to be working with the Climate Financial Risk Forum. I have to write these down because of all the amazing acronyms that exist, with impacts to look at adaptation risk. So again, we see it very much as our remit within the Green Finance Institute to work our way through different sectors and relevant financial mechanisms, but also make sure that we're working across climate, both preparedness, net zero, and nature as well, and making sure that we're joining these things up. So ultimately, those that are doing the doing in the real economy can see the advantage of aligning this work so that we're making progress everywhere. In relation, and I appreciate I've already taken up quite a bit of time, so I'll be quite quick in terms of the work that we're doing with the Bank of England and UNEP and with the universities of Oxford and Reading, really trying to drill in from that statistic that I used earlier globally, where the interdependencies are within the UK. And again, making sure that that information shows the seriousness of what we're dealing with, the need for action, but ultimately gives us clarity as to how fast and at pace we need to move through this spectrum. So where, again, we were talking about what can we learn from the climate progress that we've made, using those mechanisms to turbocharge our work around this broader nature environment so that we are moving towards our delivery targets. 2030 is so important from a climate perspective, so important from a natural environment perspective, and we get stuff done. Thanks.
Thanks so much, Emma. I can't wait to see how the work evolves over the next few months. I mean, really keen to move on to audience Q&A very quickly, but we can't discuss the topic of scaling nature finance without acknowledging the innovation that is required to facilitate greater investment. And our report examines several different types of innovation required: emerging financial products, the need for new blended finance models, high integrity nature credit markets to be developed, and of course, the technology and methodology that enables monitoring, reporting, verification of the impacts of nature-related investments. Katie, I wonder if I could just ask you, could you please share any particular area of nature finance innovation in which you think the UK can play a leading role?
Yeah, I was just going to talk a bit about data and metrics. It's something that's very close to my heart, having worked on this for a number of years. But actually, for us at Lloyds Banking Group, it's one of the biggest challenges that we're facing. And actually, any large financial institution that's trying to grapple with nature is really trying to gather the right data to understand the relationship that our clients have with nature. Having a standardized way of looking at a company's impacts and dependencies on nature throughout their value chain is going to be a major unlock in terms of understanding our own risks and opportunities in this space. And we see that the TNFD is working to help address this challenge, because the recommended disclosures will help to encourage that reporting in a standardized way. But in the data and metrics space, there's loads of exciting innovations happening right now. There's developments around environmental DNA, things around AI and satellite data, which are really, really exciting developments. There's a potential to look for a nature data utility that would be really, really helpful for financial institutions. And also, we're looking to projects like the Align project, which is producing recommendations for how to standardize biodiversity measurement. And things like this are really helping to move this space forward. And for us at LBG, it's becoming increasingly important, we feel, to collect the on-ground data. Nature's place-based, and we need to have that site-level data to help us understand the risks and opportunities. And that's something we're trialling through our partnership with the Soil Association Exchange, where we're providing a free platform that helps farmers and landowners to holistically measure the farm's environmental impact, and that includes water, soil, and nature metrics as well. So this is just some of the things in this space, but there's loads happening.
Thanks so much, Katie. Emma, strongly related to the topic of innovation, I'd like to direct our first question from the audience towards you, if that's okay, which is, could the UK become a nature positive centre without a nature credits market? So very open question. It might be helpful for me to talk a little bit about nature credits more generally and where the UK is on that journey.
I think it's the whole nature credits market needs a lot of detailed work involving kind of everybody that needs to be involved to make sure that we're creating markets with integrity. And this is one of those areas where radical collaboration, new ways of doing things, making sure that communities are involved, and that we're also working in a language that everybody understands, will help us deliver on those markets. I think it's challenging wherever you work on nature markets, and with credits in particular. There's a lot of cynicism, there's a lot of trust lacking, but you build those new forms of trust by bringing in those that can challenge and I suppose understand what we're all trying to achieve, as opposed to where financial markets can, quite frankly, in certain historic environments, have lost a lot of trust. So I think this needs to be done in a way that brings in all of the relevant organizations in a trusted environment where everybody feels listened to. And I think this is also where it is helpful that we have consistent policy to enable those markets, which may follow different strands and be based on different topics, whether it's soils, whether it's nutrients, whether it is whatever, in a trusted way, so that we can develop these over time. I think that has to be understood for us to, for wherever you are in the world, to create these trusted markets. But we have to go into those conversations understanding that not everybody sees finance as the answer to everything, and that we listen to what is coming across as perhaps the unintended consequences that those that are entering this discussion from a financial perspective, very gung-ho about the money to be made, really respond to some of the challenge that is being put forward.
Thanks, Emma. I think many people on this webinar will be watching very carefully how nature credit markets develop over the coming months and years, especially the efforts to ensure they are high integrity. And in the report, we draw on a few lessons learned from the development of both voluntary and compliance-driven carbon credit markets with that regard. Katie, I'd like to direct our next question from the audience towards you, which is, as panelists have said, we need to tackle net zero and nature goals in an integrated way. Do financial institutions need more guidance on what the nature positive transition should look like?
Yeah, so short answer is yes, please. I think it's clear that's the pathway we need to be working towards. I think there's certain things around, for example, the definition of nature positive. Now I know that there was the nature positive initiative was relaunched just last week to work to develop this, and this is something really important. Lots of corporates and financial institutions want to be able to come out and commit to something like nature positive, and being able to clearly say, well, this is how it's defined and this is our contribution to that would be really helpful. But I think to the question, sort of looking at those transition plans as well, so thinking about, so Mark mentioned the transition plan task force that we've been involved in as well, and it's about thinking about embedding nature in those climate transition plans, but also thinking about, do we need a nature transition plan, and what does that look like, and does that help us to reach nature positive? I think having more case studies is always helpful in this space, sort of being able to really tangibly say what has happened before and what we can sort of take on. And I think being able to bring in financial institutions from early on, I know my colleagues would be really, really keen to be involved in the development of guidance like this and sort of bring that finance sector view to help make sure that stuff that comes out is super relevant for the finance sector. I think that would be brilliant.
Brilliant. Thank you so much, Katie. Mark, I think a question for you is this topic only related to large and listed companies, or will SMEs also need to report on their nature impacts, either through regulation or market pressures, including from banks and other investors?
Thank you very much, James, and thank you very much to, I think it was Tony asked this question. So from a pure disclosure and reporting perspective, at the FCA, our jurisdiction extends only as far as listed companies. So within our current rules framework, it is listed companies that have disclosure requirements placed upon them in relation to climate and reporting against the TCFD framework. But the government has separately extended reporting requirements to large private companies as well. Were there to be reporting requirements in relation to nature in the future, we would be considering the application of those under the umbrella of ISSB reporting, assuming that it's brought into that framework. We would be considering that for listed companies, but the government may consider extending beyond the listed segment to private companies. And if a similar scope were applied as to climate reporting today, that would be large private companies. But I think an important point here is that these are topics that affect the entire economy. This is a whole of economy transformation. So even in the absence of specific reporting requirements, there would seem to be a case for all entities to think through how nature-related risks and opportunities might affect them, and to consider that as part of a wider strategic consideration of how they manage the breadth of their resources and relationships, and the impacts and dependencies that are created with nature, with the environment, with society. So I think this is a bit of a mindset shift across the entire economy, and there are risks and opportunities for all, even in the absence of specific mandatory regulatory requirements.
Fantastic. Thank you, Mark. I might actually stay with you for the next one, which is around what do you see as the role of investor stewardship in meeting nature targets?
Thank you. That's a great question. I think we're already starting to see, and Katie has referred to this as well. We're already starting to see a consensus building that these matters do need to be taken firmly into account in making all financial decisions, including investment decisions. And I think investor stewardship has an incredibly important role to play in helping to embed and accelerate the transition through ongoing investor engagement with investee companies. We're already starting to see certain initiatives established here. We've got a Nature 100+ initiative that has now taken hold. The PRI has done some fantastic work in this area. So I think we can expect to see much more investor scrutiny and much more investor engagement on these topics as the recognition of the fundamental role that nature-related risks and opportunities can play in companies' future prospects is spread right across the market.
Thank you very much, Mark. I think we might be able to squeeze one more question rapidly in, which Emma, I might come to you on, which is, what role and implication and opportunities do you see for regional and local government in this space? I suppose a very obvious short-term one is going to be around the implications of biodiversity net gain for local authorities.
I think there's a massive opportunity, and it links also to this question around SMEs, and not from a reporting perspective, but from a delivery perspective. A lot of our nature interventions can be quite small and but build up into something quite significant. And if we make this a program that is all about big institutions and expressed in a language that individuals and communities and those running small businesses and those involved in civil society organizations aren't involved in, we will make a really big mistake in terms of our ability to deliver on this program, which is precisely why local government and regional government has a role to play. I mean, just yesterday, and I'll be really quick, I was looking at the installation of rain gardens around a London borough, and there is huge potential for those rain gardens to provide wonderful spaces of nature that are also delivering on flood retention, flood mitigation that build up over a community. They also need maintenance for them to work and for them to stay beautiful. We have to come up with new mechanisms that allows that money to flow through, not just to do the initial work, but to make sure that over the 10, 20, 30 years into the future, that we need these interventions to work and provide the shade and the flood relief, that they also remain beautiful and serving nature. And that needs new models of delivery, and we need to work really cleverly to make that happen. Thanks.
Thanks, Emma. We sadly have to draw the session to a close there. I'd like to say a massive thank you to all our panelists for their involvement today, and of course to everyone who attended the webinar. So a final reminder that session recording will be made available, and you can of course download the report from the City of London website. One final plug. And please do reach out if you'd like to discuss any elements of the report in more detail. So all that's left for me to say is thank you very much, everyone, and have a great day.